Hello, everyone. Welcome to the 12-Minute Trading 2024 Mid-Year Review. This is Dave Lucas. This is a recording of the event. We actually had an issue with recording the event. We got about half of it live, and then the other half, part of it was me not hitting the button early enough, and then we had a little bit of issue with it. So I'm re-recording the first half of this for you so that you can see everything that we covered in there as well. And then you'll obviously see the back half and everything else. So if you have any questions about any of the material, anything, always reach out to us at support@12minutetrading.com. And don't forget to go to 12minutetrading.com/MY 2024 for all the special bonuses and offers and everything that we have for this event. So, all right, so let's jump in. And the first thing I have to do as part of, every time the housekeeping, those pesky lawyers require us to show this disclaimer and let you know that neither Doc or I are financial advisors, nor should we be thought of as one. So this webinar is for informational and educational purposes. You should always consult your financial advisor for your needs. You and you alone are responsible for your financial decisions. All right, real quick, just who am I? Who's Dave Lucas? For those of you that don't know who I am, I started out a little over 20 years ago in my car, making less than $1,000 per month in my first business. I was even dressing up as characters for kids' birthday parties, serving and bouncing at a nightclub to make ends meet. I knew that I needed to learn what I did not know so that I could reach higher levels of success. So I went to work in the Fortune 500 space for about 6 years. I had a lot of success where I ended up spending my extra time and weekends traveling to meet and learn from really the most successful people that I could find. And I got to meet and sit down right across the table from amazing people like Zig Ziglar and the Brian Tracy's of the world, and a number of millionaires, even a couple billionaires, all with a goal of looking for the consistent habits and patterns that made them and kept them successful. As I started to figure these out and put them into practice for myself, reaching more levels of success, and I found that applying them to my businesses helped them to succeed even more as well. After some prodding, I wrote a best-selling book called The 10-Year Career, where I shared the principles in that book to help others. Early in my career, I started investing in real estate and then the markets. But when I took a 90% pay cut to leave that corporate world and focus on building what became my largest business at the time, my wife and I were in the process of adopting our daughter, Hannah, and I was determined not to quote unquote finance her through going into debt. So I took the principles that I learned investing in real estate and I transferred them to trading the markets. And my goal is to create a consistent income to help fund our adoption while working 80 hours a week in that business. And the 12-minute trading strategies were the result. I'll talk about this a little bit more in a few. I've built a number of businesses over the years, including 12-minute trading, the Misfit Entrepreneur, real estate and business holding companies, and larger software companies that have been on the Inc. 5000 and Entrepreneur 360 list 7 times. And I was fortunate to sell some of them and semi-retire, spending more time with my family and focusing on one of my passions, which is Ironman racing, which I'm blessed to be ranked top 2% in the world at this time. But probably my biggest passion has always been building wealth through investing and trading the markets and teaching and helping others to enrich their financial lives by teaching them how to create a trading business that produces professional trader-like income without having to put in what is considered professional trader-like time. And that's really what we do here at 12-Minute Trading. Now, Doc is obviously cut from a lot of the same cloth. He's been trading for a little over 20 years as well. He runs the live trading rooms here at 12-Minute Trading, and he's a contributor to a number of organizations over the years, from Options Linebacker to Options MD, TheoTrade, Doc's Trading Tools, and ReadySet.Trade. He is the author of 2 best-selling books, Hacking the Holy Grail, which really helps you with the mindset of trading, and then Fractal Energy Trading, which talks and teaches about the different timeframes in the market, how to read them and take advantage as well. His specialties are fractal price analysis, options and future strategies, trading mindset, and simplifying the complex. All right. With that said, I'm going to jump into the lessons that we have taken from the first half of 2024. Lesson number one, markets and options trading have gone through a paradigm shift due to zero DTE. The biggest thing that I have noticed over the last 6 months and really the last year plus is that the way markets move have changed. It wasn't long ago that a 50-point move in the SPX was a massive event, maybe once, twice a year. Now it's a weekly, if not daily occurrence. In fact, as we record this, it was up 115 points, I think, on the day. Zero DTE options have really changed the game and really created a more manic day-to-day market, which presents both opportunity and challenges. For me, it's clear that it makes it harder to manage trades like spreads and iron condors in the traditional ways of rolling things out. It used to work very well to manage a trade that way. And typically you could take one, maybe two rollouts at the most, and you could exit with minimal to no damage because you could sell the other side to help fund it. Now you can be attacked on one side one day, and as soon as you manage it, you're attacked on the other side the next because of the larger intraday and weekly price swings in the market. And this has led to me making some changes on how I approach these strategies going forward, even bringing back strategies like the wheel strategy, which are much safer and self-protecting strategies that still produce a really nice income. And I'll cover this more when I talk to the specific changes I am implementing here in a bit. Lesson number two, price is still king. I mentioned at the beginning of the year that price and price movement are king. No matter what the technicals say a market should do, all that matters is what price is doing. And I will say that the Bollinger Bands have stayed fairly true. When we extend or we get outside of them on either side, stock typically snap back inside. Now, sometimes we have to go a little bit longer than you think it should on either side, but it typically happens. And we've seen that over the last couple of weeks. I think the Russell 2000 is a great example of that. So I still think one of the best places to put trades is outside the weekly Bollinger Bands, but price movement still wins above all else. Lesson number three, volatility matters more for high probability trades. One thing zero DT has done is change the game for the way volatility behaves. We've seen some extremely low readings on the VIX that stay for long periods, and then we'll have a major explosion of volatility that lasts for a short time and then back to little to no volatility again. It's these explosions in volatility that are a blessing and a curse for high probability trades like my double doubles and 50/50s. They are a blessing in that these times are the best times to enter and sell very far out of the money premium. But they're a curse for existing positions as they have to be sold closer to the money originally when the IB is very low, and so they're more prone to getting attacked. Additionally, a volatility spike makes the options premium skyrocket, which with those type of trades where you're profiting one day, and then you have an IV explosion, all of a sudden they can be, not profitable underwater, and they have to be held longer so that time decay can make them profitable. This presents some good lessons in that high probability trades should be a major focus during times of high volatility, and lower probability, higher credit, or wheel type trade should be used in a very low volatility environment. Trades like the double double can be done in both, but they need stricter rules to avoid issues when getting attacked. And I'm going to share my changes to those here in a bit. All right, bonus lesson. Be fearful when others are greedy and greedy when others are fearful. This will always hold true. I think I've done this as a bonus several times over the years because when there is blood in the streets, and recently there's been some blood in the streets, that's when you need to remain the calmest and look for the opportunities. This is proven over and over again. And these opportunities do happen more in a bear than a bull, but when they do come along, you cannot be paralyzed with fear and not act. The time to act is when things seem the darkest and bleakest in the markets. And lately, there's been some awesome opportunities. And with that, I'm going to go through Doc's lessons for you. All right, so lesson number one from Doc is market character. You always need to understand the current market character of the market and what it would need to do to transition to a different form or stay in the same character. And he's going to talk about that a little bit in the second half here. Market character part two is understanding what the current character that the market currently is in. That also means you need to understand what it's likely to transition to next, because that will impact the strategies that you use, because you always have to be forward looking in the markets. And then lesson number three is to be successful, you have to learn to ignore that conventional wisdom When things are going really, really well with your trading, then you should consider scaling back, taking some profits, maybe switching, like if you own stocks that have done really well, maybe taking some of those profits off the table, switching to synthetic stock or buying calls, that sort of thing. And so that's how you want to look at, when things are going really well or when things are going really bad, you want to look at the opposite, right? When conditions look really bad or scary, that's the time to hit back really hard. Like I said, some of the best trades feel the worst to do. All right, some other takeaways for you for this year so far. The Fed has done it again, starting too late, staying too long. They always do that. They always are late to the party and they always stay way too long. They should have cut rates sooner and they should have started or should have, I'm sorry, they should have hiked rates sooner and they sort of started cutting rates sooner. Markets are going to be more volatile in the back half of the year. We have the election. The Japan carry trade issue isn't over yet. For now, Japan has relented, right? And they aren't raising rates, but if they go back to raising rates again, really they would need to cut rates. So we'll see what happens there. Slowing economy, all the macro fundamentals from highest credit card debt on record to the all of the savings from the pandemic are gone. In fact, savings have gone negative. We have very high car delinquency rates right now. FHA mortgage delinquencies are over 10%. There's a lot of things that are happening from a macro standpoint. And remember, the macro is a cruise ship. It's not a speedboat. So it happens over time. And so come fourth quarter into Q1 of 2025, it's very likely that the US will go into a recession. And so we have to think about that. And then obviously it's over time, every time that rates start getting cut, markets actually drop. So you have to watch that. So there's a lot of volatility in the back half of the year. We also need to be much more disciplined in our trading through year end because of that, right? We need to be very, very on point with the strategies that we use when we deploy them. We have to stick to our rules. We have to make sure that, setting your stops, all that stuff needs to be done and it needs to be disciplined and stuck with consistently. And then everyone must learn to read market character and its transitions. All right. Best advice for the rest of 2024. Write your rules down for your strategies, study them daily, and do not break them. As the character Winston says in John Wick, rules, without them, we live like the animals. Well, in trading, we could say rules, without them, our capital is eaten by the animals. And that's why I'm making some very specific changes to my rules going forward, and I'll share them here in a bit. But first, let's talk AI. I have been doing a lot of work in using ChatGPT across my different companies and my trading and putting together the ways they use it in the best ways to be most effective. Now, I must say that AI and ChatGPT specifically are tools that, when used properly, can make life easier, more efficient, make you more effective in really whatever you do. But will they magically put more money in your trading account in your pocket? No, but with a little work, they certainly can help you be more prepared, more effective, and a more profitable trader. So what I want to share with you today are the top 10 ways to use ChatGPT to be more effective in your trading business. All right. Number one, market analysis and trends. ChatGPT can offer comprehensive market overviews, including technical and fundamental analysis. So I'm giving you sample prompts that you can go plug into ChatGPT. So for example, ChatGPT provided current market analysis for the S&P 500 or the current trend of the S&P. What are the best option strategies to take advantage of? So let's just jump over to chat and take a look at what it says for us. So here we go. We'll jump over to ChatGPT and we'll ask it that question. Provide a current market analysis for the S&P 500. So right now it's saying it's had a strong performance year to date, but lately there has been some weakness coming in. Technical outlook suggests potential downside risk. S&P is currently trading below its 20 and 50-day moving averages. Economic factors that it talks about, Federal Reserve with rates, the outlook. The market may see continued volatility in the near term as traders assess these actions. So pretty good synopsis, right? So now I can say, what are the best option strategies to trade in the current market? So basically, it's telling me protected puts, covered calls. It's a form of the wheel strategy, right? Iron condors, high volatility. Iron condors work really good. Put spreads, call spreads, straddles and strangles, right? Calendar spreads, right? Our campaign cash flow. Collar strategy, right? A collar is a good strategy, especially with stocks that you own. I can even go further and say, give me an overview of the wheel strategy. For those of you that don't know what that is, it'll give us an overview of it. So options trading strategy that involves selling put options to potentially acquire the stock and then turn around and sell covered calls. Now you can do it opposite. You can buy the stock, you can sell the covered call, and you buy the protected put on the other side. But you can see how it's giving me everything I need about this. And I can say, give me a trading plan to sell weekly covered calls at the money with the wheel strategy. If I can spell right, wheel strategy on Meta. So here it goes. It's outlining my entire strategy for me of how I do it, the steps I need to take, selling the covered calls, owning the 100 shares, what happens if you're assigned, outcome scenarios, repetition, repeat the process, risk management, stop loss mechanism, exiting the strategy, giving me an example. You can see how powerful ChatGPT can be. And then I can even say, can you give me a trade tracker that I can use for my trades in Excel format? So now it's analyzing, it's actually creating the tracker for this strategy to use, and it has created it for me. And there it is. So I'm now pulling that up and I will show that window here. Simple tracker, but something to use. And you can ask it to get more complicated and everything. So here's my tracker that it has created for me right at this point. And so there it is. It's got everything that I would need to do the strategy in it. So that's how powerful ChatGPT can be. And a lot of the different ways that you can use it. And it's just all about the prompts and how you ask it things. So for 20 bucks a month, it's probably one of the best investments you can make in a tool to use to help you be more effective and efficient in your trading. So let me jump back into the presentation now and go through, all 10 of these for you now that you kind of got a taste for how this can work. All right. So with that said, let me get rid of the tracker there. There we go. Number 2, strategy development. Well, we covered some of this just a second ago, right? It can help you build out your strategy. It can create the resources for you. I want to develop a strategy for consistent monthly income selling options. Or you can ask it these things that will help. And the way you prompt it, asking it, going further, going deeper, it will give you more detail, will help you out. Risk management, right? It can help you better understand how to manage your risk. It was even giving me risk management techniques, as you saw in those answers when I was asking it the questions. Backtesting strategies. So you can do simulated trades. So you can load historical data into ChatGPT and you can have it backtest the strategy using that historical data to let you know how often you would win. Trade execution and timing. It can provide advice on the optimal times to enter and exit trades based on trading signals. Portfolio management. It can suggest ways to diversify and balance your positions, managing risk, helping you achieve your goals. So you can ask it those different prompts. You can essentially upload your positions and say, hey, based on these positions, what could I do to balance my portfolio and make it, more effective? And it would tell you. Educational resources. ChatGPT can provide clear explanations and recommend educational materials for further learning. So it can explain the options, strategies to you. You can ask it about the Greeks. You can even ask it to outline books on trading. If you want to like outline of Peter Lynch's One Up on Wall Street, it'll give that to you. It'll give you the whole outline of the book so you can get the best points of it. It'll even point you and find like the 3 best videos on the web for selling covered calls or naked puts or whatever strategy you're interested in. It is a great tool, so much more advanced than Google, and it learns with you. And the deeper you go with it, the more it can give you. News and alerts. It can also deliver real-time alerts that can impact trading decisions, obviously specifically for you. It can provide news on your watch list, right? So you can upload your watch list of stocks and say, here's my watch list. What's going on with these stocks? It'll tell you in a split second. Performance analysis. You can create trading journal, analyze your performance metrics, right? Your sample prompts for this could be create my trading journal for selling naked puts or the wheel strategy, right? And then what metrics should I use to evaluate my performance? It'll help you. And then mindset and emotional support. ChatGPT can provide tips for emotional management and maintaining discipline. So what can I do to, make sure that I'm using logic and not emotion? What, should I be thinking about from a technique standpoint to maintain my discipline? It will give you all of that. So hopefully you can see how powerful, this tool is to help you in your trading business. And as a free gift to you for watching this, attending this, if you go to 12minutetrading.com/my 2024, MY, mid-year, MY 2024. So just my 2024, you'll actually get a cheat sheet of all these sample prompts and these 10 different ways that you can use ChatGPT. You can download it. It's free for you there and get all of that. So check that out. All right. So now I'm going to cut into that portion where we started to do recording with Doc, and he is going to take you on a journey through the bear market survival guide, as well as the different character types of markets. Thank you for watching, and enjoy the second half of the 12-minute trading 2024 mid-year review.
Okay, so we're going to go over the bear market survival guide, which I think a lot of people have been caught by surprise for this move that we saw coming in the last 2 to 3 weeks. And so a lot of people don't really know much about bear markets. It's something that you suffer through and that you just sort of shut your eyes and then you hope that you come out on the other side of it in one piece. But we don't have to think of it that way. It's just a normal progression for what happens in the markets. We usually see a correction at least once a year. Some of them actually turn into true bear markets. So let's be prepared for what we're about to see. And I'm going to teach you a little bit about how they operate today. So first of all, the first thing we're going to do is define what a bear market is. There's a lot of different ways to define it. I don't think any of these really are that useful. A general decline in the stock market over a period of time. Okay, that's not helpful. Price decline of 20% over or more over a 2-month period. Okay, that's a little bit of quantify the definition. A change in investor sentiment from overall optimism to widespread panic and pessimism. We're not quite there yet. There's a little bit of panic out there, but I wouldn't say it's widespread panic and pessimism. So we're almost there. Or supply exceeds demand, the bid must continue to drop to bring in new buyers. However we define it, it's usually a painful experience for the majority of investors. It doesn't need to be with a little bit of knowledge. So it's something that we all go through. You may as well learn it, right? So what's the difference between a bear and a correction? A correction is normally defined as something that's about a 10% decline. Now, I have a beef with that number because we often see corrections like right now, the current correction is 9.7%. You can't tell me that because it doesn't meet the 10% number that it's not a true correction. It absolutely is. It is completely different from what we saw leading up to the middle of July. This is completely different. This is a full correction. Even the one that we had in April was, in my mind, a correction, even though it was only 5.6%. And then, of course, here's last year, we had August through October. That was a full-blooded correction, 10.8%. Okay, so we're going to see these quite often, but none of these are bear markets by themselves. So when does a correction become a bear? So I'm going to throw this out there for you guys so you can kind of play along at home here, each of these corrections in yellow have showed up over the previous years. It was like 2018. And then, of course, we had our pandemic. I take exception to people saying that that was a bear market. It truly was not. It was just a very deep correction, very quick correction. This is what a bear market looks like. Bear market will constantly test you because it will rally. Bear market rallies are actually some of the strongest rallies that you'll ever see. And notice how close up to the former highs that you were. I would say the majority of people were saying, okay, we're all done with this corrected market. We're ready to head higher. And just when that happens, the trapdoor opens up and down you go again. And every rally seems like there is no hope left in the world. And so there's a huge difference between something like this, which is over. It's kind of like ripping the Band-Aid off, which is what most corrections are like. Most corrections are just over with pretty quickly. But some of them actually transition into full bears. And that's what we'll talk about a little bit more. So a bear market is actually a series of corrections instead of a singular drop or bounce. So where are we today? So what's the difference between these two moves? Here was the bear market of 2022, which kind of bottomed out at the bottom of October in 2022. Took a long time before it showed its hand that it was heading to the new bull, right? And even until last October, there was still a lot of doubt before this thing took off like a rocket. So can you see the difference between what a true bear looks like versus just a single swing to the downside? This is a weekly chart, by the way. So 4 weeks in a row to the downside. This is where we're at today with futures down 43 handles. We're going to be testing the lows in the morning, but 9.7% right now. Okay, so this is the monster that we have to learn to deal with. Okay, so that is what a bear market is. So we've defined what a correction is. We've defined what a bear market is. We can see how often they show up. Now we're going to get a little bit more practical. We want to anticipate and identify the bear. Let's talk about anticipating the bear. Wouldn't it be nice to know, would you guys agree that it would be good to know when one of these is about to hit? Okay, so what tools can we use to anticipate trouble in the markets before it shows? Something that all of you need to know, I'm sure you can find this diagram out there somewhere, or you can just do a screenshot of this off the replay video, is to understand the overall cycle of how markets operate. Now, I'll give you an easier definition of this in a minute, but we basically go from, optimism up into euphoria, where people are saying, okay, it's just a dip. And then all of a sudden we go into, just utter panic. And then eventually we recover from that. We go through these peaks and troughs again and again and again. These cycles will repeat in perpetuity. So I don't care who's trading. I don't care if ChatGPT is trading. I don't care if it's a trading bot. I don't care if it's a Cray computer or some type of, quantum computer trading someday. It will make no difference because everything is going to be based on human emotion and fear. So where do you think we are? And you don't have to answer this in the chat room, but where do you think that we are in the current cycle? Where does it feel like that we are right now? Now, here's a simpler way of looking at things. We have 4 stages to a market cycle. We always start with what I call disgust. From disgust, people say, that's it, I'm selling out, I can't take this anymore. And then the market rallies like crazy, inexplicably, and this is where we get into disbelief. And then eventually we start making higher highs and higher lows, and this is where we get into acceptance. And then finally, euphoria. I can't lose. Everything everything I trade works out. This is awesome. Like, where's this been my entire life? And then next thing you know, 3 weeks later, you're back into disgust again, right? So the cycle repeats. It bounces from there, disbelief, acceptance, euphoria, and then disgust again. I can even see these cycles intraday. In the span of a day, I can see disgust, disbelief, acceptance, and euphoria. So these 4 stages to a market cycle just repeat over and over and over again, no matter what time frame that we're in. So learn to identify this because it is truly a treasure map to what happens in the market. There's also what I call fractal energies. Now, this is what my book is based out of, but we're using different time frames to understand what's going on. It's almost like a family of time frames. Here's the monthly chart, the weekly chart. We're going to get different signals off of these, the daily chart on the right-hand side. But the energy is what I'm interested in. You can almost view this as a fuel gauge. So full, empty on this indicator down at the bottom. If you want to know more about this, please let me know offline. It's way beyond the scope of tonight for me to explain this, but it is in one of our courses. So this is full and empty, excuse me, for each one of these. And right now we're kind of empty on energy to the upside. This is, you know, if you go to summit a mountain, you're not going to be able to just sprint up the side of the mountain all day long. You're going to get exhausted. You're going to have to rest. This is how markets also move. So we'd gotten exhausted on this move as well on the weekly chart. And then, of course, we got exhausted on the daily chart. So we had in mid-July, we had this rare triple exhaustion to the upside right when everybody was the most optimistic. So this is something that we can use to identify periods of time where we may likely fall into correction. Now, there's also member divergences. So if you follow the S&P 500 or the NASDAQ, you're going to see, especially in the NASDAQ particularly, because the NASDAQ has driven, you guys are aware what the Mag 7 is, but these mega cap stocks that have driven the market really since the mid 2000s, right? Since Google came along and, you know, Facebook came along a few years later and you know, Microsoft was nothing back then, but they've really become dominant lately, and Apple and Tesla and Nvidia and all of these, right? So they're just driving the market. They're the only $1 trillion market caps that are out there. So they have a huge influence on the market. However, if you look at this, this is the percent of stocks above the 200-day moving average. 200-day moving average represents an uptrend. So if you've got fewer and fewer and fewer stocks in an uptrend and just a few of them pulling the whole train higher, then eventually at some point they're going to have a problem too, and the whole thing's going to collapse. This is exactly what we saw in mid-July. And then, of course, you have a reversal candles. This is a little bit more of a technical skill, but understanding just these little subtle things, like every day we come along here and all of a sudden we print a new high first thing in the morning, and I see this live because I'm running a trading room every day. I see the price pushing higher into a new high in the morning, first thing, and then start selling off near the end of the morning. Every day, the same thing starts happening. It's a signature. It's basically the market trying to tell you, hey, I've got somebody out there selling inventory. Somebody's out there selling inventory. These big institutions do not have to tell anybody about it. All they're doing is they're helping push the things higher in the morning, and then they sell right into that rally. So we're seeing all kinds of these reversal candles that show up. It's like moose tracks. It's a signature that you can follow and understand that you have anticipation or warning of this. Okay, so this is how we can anticipate the bear. And I could talk about this for hours, this stuff, but you know, I just want to give you guys some idea of the tools that are available. Now, once we're in the bear, how do we navigate it? Well, there's some different correction metrics that we can look at that will give us a little bit of an idea from a numerical perspective. So one of my favorites are the oscillators such as the RSI 14, relative strength indicator, when it gets down to below 30. And as of tonight, as I stare at the chart right now tonight, it is at 30, right? So it's showing a very typical area where we typically see bottoms in the market, at least short-term bottoms. And then we have this old school monster down here, the McClellan oscillator. When that gets down to negative 300, and right now it's about 116. So we have a little bit further to go on this. We could see a retest of the lows that may get it down there. So these two oscillators are pretty reliable for identifying areas where we might just print a bottom. We can also look at fractal energies when we see exhaustion on the daily chart to the downside. So you can see here, showed an exhaustion signal. This swing down here showed an exhaustion signal. This swing down here also showed an exhaustion signal. So that shows us when the price is exhausted and is likely to rebound. Are we there yet? Not quite. Maybe tomorrow we could be down in that area. Okay, it's a very linear signal so far. We can also look at fib retracements as potential landing spots. So right now we're looking for confluence for these. We had some nice confluence with these major fibs for this big swing, as well as the minor fibs for the small swing down at 5,300. And those are going to be former support becomes new resistance. So that's kind of what we're seeing now, is that is now resistance for this. That's on the SPX cash index. And so we also have some confluence down here at about 5,100 as well too. So fib retracements are going to show us potential landing spots or potential overhead obstacles on the way back up. And boy, this is going to take me a little while to explain. I encourage you to pick up the book or look into our courses on fractal energy trading, but this is a massively important concept of how trend propagates. So you can see here we have a daily downtrend. We have lower highs, lower lows. What is this on the weekly chart? Is that a downtrend? No, it's not a downtrend yet. A downtrend on the weekly chart would look something like this. We'd have to bounce up to a lower high and then resolve lower again. So this would be that same pattern propagated up on the weekly chart. So we're not there yet. This is why I'm saying that bear markets build over time. So we would have to see wherever the bottom of this is, we would have to see something like this come up, and then it too would have to fail. So that would take weeks for that to set up. And we'll get a bounce in the meantime from that, which we can play in. And then ultimately, if this were to transition into a bear market on a monthly chart, this is a true bear market when we go into a downtrend in the monthly chart. You can see exactly how this happened back in 2022. It will take months for that to occur. This is what we call trend propagation. Okay, so these are all the correction metrics for us to be able to study what's happening with the markets. So how do we trade this? How do we trade the bear? How do you trade before and after the bear? So what works before the bear? A late stage bull like this. If you're not long, you are wrong. Implied volatility is very, very low. This is probably where you'd be better off being an option buyer and not a seller. Usually you're dealing with a VIX, which is almost in single digits, and you're not getting very much distance on iron condors or any kind of option selling. It pays to be a buyer instead of a seller. So what is the transition like? When this transitions, all of a sudden implied volatility starts to swell, and any put credit spreads that you put on before this, you didn't get very much distance, and so you're going to get run through like a pike. The entire character of the market has changed now with how the price moves and what's happening with implied volatility. All of a sudden, implied volatility is going sky high. It's ripping higher. It's putting a lot of pressure on your trades. You need to anticipate this transition. Now, after the transition comes, here's that VIX. This is the fourth highest VIX spike that we've seen in history going back 40 years. So if you wait until after the swell in implied volatility, now you have a general Vega edge in your positions. Again, well beyond the scope of today's, but this is having a Vega edge means that this is where you want to be selling option premium because it's more than likely going to revert back to the mean. Okay, you can also think about hedging. Everybody wants to hedge now, right? Hey, how do I hedge? It's too late. You got to be in it already to win it. You must start your hedging process before the drop. Before the drop, when you see the early signs that we discussed before, you can pay for the hedge using a campaign diagonal, which is one of our strategies, or use out of the money short puts. It's not going to be very easy to do this. Some of the short puts will get run over if you want to finance it. So what you're waiting for is the long option value to swell through this Vega and a spike in implied volatility. Probably well beyond the scope of tonight's session. All right, so let me wrap things up here in a minute. How can you use this short presentation? I've packed about 2 hours of information into 15 minutes here. How can you use this to make money during the next bear? There is a very specific identifiable progression of changes that a market makes to transition from bull to bear. You need to study these. You need some experience. You're not going to pick it up the first time through. It takes repetition like everything else. You can learn to spot these transitions. You can anticipate them. You can start to make money from them while everybody else is in pain. And you make money much faster during a bear. Metrics, they're very specific technical metrics that will help you identify when the market is likely to turn. Please note that we're not trying to predict the future. Literally anything can and will happen. There's a statement I heard from one of my mentors 20 years ago. It said, there is no such thing as support in a bear market, right? So you're just trying to identify a probability edge. You're not trying to predict the future. Time frame propagation, rule number 2 of fractal energy. Reversals start from the smallest time frames, and one by one, they propagate higher. What starts off as a daily downtrend with lower highs and lower lows will eventually reverse higher. When it does it create a subsequent lower high, lower low on the weekly chart? Does it become now a weekly downtrend? That's trend propagation. And if it gets to the monthly chart, now you've got a real problem. That is a true bear market. Strategies. How do you trade strategies differently when you get into a bear? Before the bear, when markets are weakening, take profits. Be proactive here. Take profits on long. Remove your campaign diagonal time spreads. Remove your iron condors. Start to set up potential hedge positions. If you're going to go short, now's the time to do so. After the transition to the downside, when markets start to slide, do not go short at this point. It's too late. Look to sell premium now via cash secured puts and credit spreads. Understand levels where you would consider getting back into diagonals. So if you see the market doing something like this and then losing it to the downside and then bottoming out here, at what point would you get back into some kind of a bullish strategy? All right, so what are your next steps? Let me wrap up here. Learn the transitions. Look at bear transition as a normal part of the market cycle where, quite honestly, guys, more money transitions from the dumb money to the smart money than at any other time. Learn to be part of the smart money. Learn how the different fractal time frame pieces fit together like a puzzle. Learn what strategies work best during different market conditions. Don't be a one-trick pony. This is what I was a one-trick pony when I first went solo in trading, and I had to learn to become more versatile. As always, use us here at 12-Minute Trading as a resource to learn how without spending more market tuition. Market tuition is the most expensive thing that you can do. Now, I'll give you back to Dave.
Thanks, Doc. All right. Great stuff. Sorry about that. Like I said, everyone, I will record the beginning for you guys so that you do have it. It'll be an abbreviated version for those that watch it now. But, you guys obviously got the gist of everything I shared around ChatGPT. All right, so let's jump into strategy changes, at least for me, for the second half of 2024. And then Doc will kind of tell you how he's approaching the second half of 2024. So I am going to go to 3x static risk on all trades, except the wheel, because the wheel self-defends for exiting if attacked, right? But if I'm selling iron condors, I'm going to start probably firing those up here in the next few days, this week or so, with this volatility where it's at. But I'm going to go straight to 3x static risk. And so what 3x static risk means, because I've had a 3x trigger before. So my 3x trigger would be like if I got to the cost of any one side of an iron condor was 3 times the credit that I originally received, that would be my trigger to start managing it and rolling it. I'm going to go straight to 3x exit. So if a trade hits 3x static risk on one side, I'm going to just exit the trade and then fire up a new one. And so what that means is 3x means I'm basically, if I get out of 3x, that's 2 trades worth of credit that I'm losing, but then I turn around and fire up a new one. So it's basically like 1 trade's worth of credit in actuality. Right. And so it's a good way to manage it. I've done a lot of work on the profit factor on this, and it still has a very nice profit factor doing it that way. You do lose on more trades, but you don't have to worry about rolling and all that type of stuff, which can be a headache and all that. Right. So you'll see me move to that. So if you're in my newsletter and stuff, you'll get an alert. Hey, 3x static risk was hit. We're exiting. And then here's the new trade that we're opening up. I'm also going to significantly increase my wheel strategy trades and look at selling naked puts and cover calls on stocks and indexes on a weekly basis. So I may pick a stock and just do the wheel every single week on it. And if I'm, put the stock, great, turn around and sell calls. If the stock is taken from me on the call, I'll buy right back in and do it again, right? And just reduce that cost basis, kind of getting back to my roots from years ago. I'm going to also be aggressive on strategies like the double during high volatility times. As I said, I'm looking to fire those back up again and then scale back the number of trades and position sizing when volatility gets low again. And then I'm not going to trade in my newsletter, right? I know people subscribe wanting trades, but again, as I said earlier, if there isn't an edge, if there isn't a good trade setup, then I'm not just going to put a trade on in the newsletter to satisfy putting a trade on in the newsletter. So there may be weeks where there just are no good setups. Doc, is there anything on your side for your strategies and how you're viewing the market that you're looking at doing down the stretch here?
I would say, Dave, you and I have talked in this sort of avenue at several times before about what we expect in the near future. And I would say if there's going to be any time where we're going to see massive amounts of volatility, it's going to be sometime in the next 18 months or so. I mean, I don't see how we get out of this without the market getting pushed and pulled into a tug of war, just titanic volatility. And I think we're just now starting to see a little bit of it right now. So with that in mind, risk management is going to be number one. There is every trade that I put on is going to be essentially hedged out of the gate so that I can walk away from it and just, not sweat it. Number one. Number two, if I travel, no trades during any travel. So all risk management set with basically you can walk away with the trade and exactly what your risk is from day one. So we don't have to worry about black swans or any kind of 1987 moves or anything like that. And I think that's going to be extremely important to survive over the next 18 months.
That's great. Awesome. Okay. So we've got some special announcements for you guys. First, I mentioned it before. So the free ChatGPT Traders Cheat Sheet. So you get this, you just attend the event. All you have to do is go to 12minutetrading.com/MY 2024. Okay. So, go check that out. In fact, I'll pull that up in a second when we do questions so you guys can see it. We're also doing we've never done this before, special 12-minute trading mid-year event bundle. So featuring 3 of our most popular master courses for just $97. So that's regularly $300. You get 3 for the price of 1. That includes the Fractal Energy Masterclass. If you really want to get into that and understand what's going on with those 4 types of market conditions and then the different time frames, that's in there. And then the 0 DTE Masterclass, how nice would it be just to be flat at the end of each day and not have to trade even overnight, right? So that's there for you. And then campaign cash flow, which will be great, as we, start to find some bottom here and start to come out. It'll be a great strategy to have. So we're giving you 3 for the price of 1. You just go to 12minutetrading.com, my 2024. So MY 2024. And then we also have a deal on the bundle with Doc and I. It's normally $247 a month. That's deeply discounted than if you went and bought them directly from the website. We're giving you another 20% off of that. So if you've ever wanted to get in and utilize our strategies and see what we're all about, you can now do both of our services for just $197 a month. And that's there as well too. So with that said, I'm going to take questions. I'm going to pull up that page. Doc, we can come back on screen for everybody. And I'm going to pull that up so you guys can see it. So right here, this is what it looks like. Yeah, get on camera. for you all. There we go. And so this is what it looks like. Here's where you can download that use the ChatGPT guide. It's right here for you. You can see it. You can download it right here. If you want to sign up for the 3-for-1 special, it's right here. And then the bundle is right here as well. If you have interest in our mastermind, if you're interested to learn about what we're doing there and how we're protecting our wealth with a lot of different other types of investments and strategies and stuff that aren't in like newsletters and things like that, check it out, especially if you're an accredited investor. It's a really great group for the things that we have for accredited. But all of this is available for through this Sunday, August 11th. So make sure you get in, get what you want by then. And just, love to serve you, love to have you guys. So we'll open it up for questions now and see what we got. So let me see here. So I've got, let's see, we've answered that one. We've answered that one. Vish, I answered you. I'll get with you separately, just to get you in sync so you can access everything. It looks like it just may be an access issue for you. We'll get that. Let's see here. I think that's all of them. I think we answered all of them as we kind of went along too. I was answering stuff, typing answers as we went along too. I do have a question for everybody watching. And Doc, this may go to some of the things we're working on. We've been doing a lot of work on utilizing, like you see me utilizing ChatGPT and other things too. But we've been looking at setting up automated alerts for specific signals and strategies. And we've been testing these. In fact, Doc and I have one set up right now that fires throughout the day and tells us when a signal hits for this very specific strategy. And it is very specific what you do when that signal hits. It's a specific trade, specific size, specific, time you do it, as soon as the signal hits, and a specific profit target. You put it on and you let them go. And we've been doing those for, the last month or so. And about 80% of them hit, which is really nice. So question for you guys, would you guys be interested in something like that? Like if it came through text and came to like a running, almost like a chat board that you had access to that said, hey, here's the signal. And then you knew exact rules and you just jumped in and took that signal. Because for us, it's been pretty awesome. I mean, like the work is done. We just put the trade on and let it go. And like I said, about 80% of the time they're hitting. So, and we got about a 50% profit target on them that we're doing. So you can type in the questions box. Would love to know from you guys if you guys have an interest in that at all. We've been thinking about making that more public. So
the first one that we're going to consider coming out with is just a very specific directional trade setup. But there's other ones that we have experience with that we can share with that are for specific applications. So if you're looking for like a specific stock, which is a dividend paying and below $50 that you want to be able to do cash secured puts on, and it's in a pullback, we could provide something like that. So there's all kinds of different ways that we could fine tune these signals for you guys.
Cool. All right. So very interested, working during the day, maybe in the future. That's the cool thing with some of these that like you can, like what he just described with the cash secured put one, like that one you could easily set up after hours. So I think different ones will be during the day. Other ones will, like there are times where I get signals for the one we're using now. And it's more of a bull strategy, like specifically for the stock. If the stock is turning bullish, you take advantage of it. Those are, you got to be in it for the day to get it, right? Because if you can miss it by 30 minutes or so, and then it's already kind of, had the move, because these can happen very quick. So like a strategy like that may not make sense, but the other ones for sure, like my old tried and true strategy of just stocks on the lower Bollinger Band, I'm selling below the 52-week low 6 months out. Like that strategy is really good. In fact, it's one that I'm starting to look at just firing back up in this environment of this high IV, right? So like that type of thing we could signal and everything, right? Doc, formerly of Theo Trade, I remember you talking about multiple time frames. So somebody who's seen you there and other places before. Good stuff.
Yeah, I was at Theo Trade from 2016 to 2018. So those were fun times.
All right. Any other questions, guys? I know we're just about at the end of our time. I just want to make sure we have that for you. Like I said, I'll go back through and I'll just kind of cut that beginning and put it together with this for those that want to watch the replay so you can kind of see all the content and everything in there too. But make sure you jump over here, 12minutetrading.com. MY 2024, you can get the free Chat GPT Traders Cheat Sheet. Take advantage of the 3-for-1 special, as well as if you've ever wanted to get into our services, now is the probably the best deal you're going to see on these things. This is the lowest we've ever, will ever go and have gone. So, and then there's some other things in here too. You can join our YouTube channel. You can sign up for our weekly newsletter. It's all free stuff. Free 5 Key Elements book that I've written. So jump on there, check it out. It's all there for you. So, all right. If there are no more questions, I'm going to give just a couple more seconds, going once, going twice. If there are no more questions, awesome. Thank you guys so much. It is such an honor to do this with you. Thank you so much for your support of this service. I will say you probably know this. I've said this before. I don't advertise, like in the sense, like we're not out there with a bunch of Facebook ads and Google ads and doing all this stuff, right? This is always grown by word of mouth from, helping people learn these strategies and learn how to make them successful for themselves and them sharing it with others and telling them to come check us out. So, if you know somebody that would be a good fit for what we do or that would like to learn about what we do, always ask if you wouldn't mind referring them our way. We really, really appreciate it. So thank you guys for tuning in. And from Doc and I, and Doc, go ahead and say anything if you want, but it's been a pleasure to be here with you tonight. And we'll get these things out to you and get things up on our YouTube channel here in the next 24 to 48 hours. And don't forget to go check out 12minutetrading.com MY 2024.
Yeah, thanks everybody. Thanks for letting us into your homes this evening, and have a great rest of the week.
Bye, guys.